Welcome to the Master Your Millions podcast, the show all about your financial potential and leaving a legacy for future generations. Here are your hosts, Jason and Scott Henderson.
Welcome back, everyone. I am your host, Scott Henderson, and my co-host is Dr. J. We are experienced investors with a huge advantage as we have been able to learn from over 100 years of experience. Here today on Master Your Millions, we are very excited for our guest. Jason, who do we have coming on?
Well, believe it or not, one of our previous guests has a partner that seems to be in the background that does a lot of the work, it sounds like to me. Is kind of the brains of the operation. And our former guest is Ryan Inc. Probably relies a lot on our guest today, and that's Preston Dellinger. Preston Dellinger comes from North Carolina, originally grew up there. He did go to college, and he decided he wanted to be in landscaping. He was a landscape engineer, yet he has turned to be a pretty successful real estate investor. And he's going to talk to us today a little bit about his journey and how he approaches real estate investing, and also how he does the financing part. And also, it seems like to me he's really good at evaluating when a deal is a good deal or not a good deal based upon their criteria. So welcome, Preston. We're so pleased to have you on the show today.
Yeah, well, thank you guys for having me. I really appreciate it. It's an honor to be here. I could give you kind of my backstory and
please do. Tell us a little bit of how you arrived at where you're at.
Yeah, so grew up in the Carolinas, like you said, and I've just kind of always had the entrepreneurial bug, I guess, if you will. And grew up mowing yards, knocking on neighbors' doors, trying to sell them landscaping services or whatever. And I decided kind of early on that's what I wanted to do. So I said, all right, so how do you do that and kind of scale it, if you will? And so went to school for business and then minored in horticulture instead of the landscape architecture route. Took way too long. It was like a 6-year program or something. So I can't do that. I can't stay in school that long. But nonetheless, got out and went straight to work for a large landscaping company, trying to learn kind of what it takes to build a large landscaping business. And so learned a lot of the facets there. This was in the late 2000s. And then I started learning about real estate, learning about the power of real estate. And, I'm looking at the landscape business. And while that was, just kind of something I've always known in life, and it seemed to be an easy route to go, just knowing what you know, learning more and more about real estate, I was like, man, you could kind of get into this stuff and have the tenants pay, and you don't have to really worry about it as much. And so it was pretty appealing, and just started, learning more about that. And that's when I started buying a couple years out of college, just started buying the single family stuff and kind of switched gears from wanting to go into business into a large scale, opening up a large landscape shop. Kind of switched gears into thinking about how to build a large real estate portfolio. And so that's kind of...
So tell us a little bit about your very first deal. So the very first, was it a single family dwelling?
It was actually a condo. Yeah, but yeah.
A condo.
Family.
Okay.
Condo.
And was this going to be a fix and flip, or what were your plans going into it?
So I was trying to figure out how to buy it with no money, and no money down. And I learned about a USDA loan, and just I was like, all right, cool. I guess they kind of pay you to buy it, essentially. I think not really. I think I had to come up with like $500, but it was a way to get into it because I really didn't have any money. I was making $35,000 working for this company a year, which is really nothing. Just bought it, and then moved into that for a few months, and then just kind of went and bought another one and learned how to be a landlord, moved a tenant in and into the condo, and then just kind of started rolling from there.
Do you still have that today?
Yeah, I do. Yeah, the first one. But Yeah, the single family stuff. I mean, yeah, we'll obviously get into the multifamily and talk about that. But once you start rolling with multifamily, the single family stuff's kind of gets to be I don't want to say like burdensome, but just at
Small,
least point.
small
Yeah,
compared to what you do. I would imagine at
So
this
I
point in
really
time, the money for that just doesn't really matter. It's more the memento, or why do you hold on to it?
well, I mean, it's real estate's one of those things. The longer you hold it, the better the return. And I mean, it's a store of value. I mean, I would much rather have my money in real estate or something physical than just in the bank, right? Especially during these times with the inflation. So yeah, I think it's just one of those things. I mean, I've got several single families still remaining that need to be sold probably and just roll it into some of the bigger stuff or 1031 or whatever. But yeah, it's just good debt, cheap debt still. And it's like, whatever. We'll just keep kind of rolling with it. So yeah, low interest rate debt, especially these times, right? I mean, the interest rates being where they are.
Oh,
You got
yeah.
So you did a few deals that were single family dwellings that started off, maybe you got into duplex, triplexes, I'm assuming. Were these fix and flips or were they buy and hold? Tell us a little bit about your journey there, and then where did the idea come from to say, instead of doing these onesie twosies, I want to do biggers?
Yeah. Yeah, I did did some flips. I mean, it's like every time you sell one, you kind of go back to like why did I sell it? Because I mean, the larger the portfolio, the better off you're going to be in the future is my philosophy. Um, did that and then just kind of learned that kind of that route and then started understanding management and tenants and went through bad tenants and had good tenants and just kind of learned, you know, more broadly about the business essentially. Learning more about the financing world and what goes in how bankers think and how banks want to position themselves. And then just started, continuing to read books and understand more. I did start a couple businesses along the way that not really real estate focused, and I can tell a little bit about that. But one of them, I actually did start a landscaping business just because I was like, man, I still wanted to do it because even with all the real estate going on and it just got too crazy. So I ended up selling that business, because we've just been very busy with the multifamily stuff. And that was 3 or 4 years ago. Ended up kind of getting rid of that. But yeah, I mean, and then so Ryan and we met in 2015, I believe. And so his college roommate and I were colleagues at the former company, and we, hit it off, have a great relationship to this day, a good friend of mine. And so he introduced us because he's like, hey, you guys are both doing or doing real estate, and you guys just seem to be aligned with what you're doing. So I'd recommend you guys kind of meeting up. So I ended up flying down to New Orleans and meeting up with Ryan. And funny story, he he had just gotten done with he used to go to the sheriff sales, the foreclosure sales. He had just gotten done with buying a yacht at the one of the foreclosure sales. I was like, I thought you were buying houses. But he bought a yacht because I think he ended up getting a good price on it, but they were selling a yacht at the sale. So I was like, man, this is crazy. And so that was kind of my first meeting with Ryan. We go down to the dock and look at his new yacht that he bought at the sale earlier that morning. But I don't know if he told you guys that story at all, but it's about the yacht. It was a pretty funny story. So yeah, flew down, met Ryan, And he just kind of drove me around and showed me his methodology on how to do it. He was doing a lot of the foreclosure sales, and I went to a few of those in the Carolinas, but I wasn't really doing that as much. So he was, really rolling with that side of the business, and we ended up partnering on a couple deals kind of early on, and really just figured out that we were a good working relationship, that we complemented each other on obviously different things in the business, and so we just said, let's continue to do this. So we continue to do some deals together. And it was just our money at the time. We weren't syndicating or pulling other investors in. And then we, decided to, well, I guess I can back up. One of the ideas, or one of the, entrepreneurial ideas, was also getting into the online, sales, because that was starting to pick up pretty good in 2016. And I was looking at it and I said, man, why not try to get into selling some online stuff? And so Ryan and I started a company to sell goods through Amazon or whatever, and quickly realized that we were not very good at online sales.
But wait a second, we got to hear a little bit more about this. You started an Amazon business.
Yeah.
And what were you selling?
Hammocks.
Hammocks. So
Ryan flew to Beijing or Shanghai, I can't remember. I was actually supposed to go. I had another engagement. It was kind of just spur of the moment. Went and met with a manufacturer there, and next thing you know, we had like 20,000 hammocks. And so we went down that road. I mean, we made money. It just wasn't very good, right? And so we realized that real estate probably is the area of focus and expertise rather than.
So would you consider that venture into Amazon a success?
I wouldn't really. Well, sure. Why not look at it in the way of understanding that focusing on real estate and understanding real estate and kind of going all in on that, instead of getting these other ideas and just kind of switching focus on the core business of what's actually working and making good money, was probably a good learning lesson. But we did learn a lot. So we learned a lot about
okay, so I want to interrupt you there. So for our listeners, this is a really good example where a venture into something new was a good idea at the time, and it's in hindsight, it still was a good idea, since Preston said he learned a lot, almost like a skin on the knee. Kind of fell down a little bit. It wasn't the kind of fun that you wanted it to be, wasn't as profitable as you wanted it to be, and it was outside your core
niche expertise.
Core expertise. Yeah, thank you. And it helped you realize that, yes, this is really what I want to do. So that was a lesson learned. When people think about, okay, I'm going to start this business or whatever, many people that are successful in this world have failed many times. Now, I'm not sure you would call it a failure, Preston. However, in some respects, it was a little bit of a failure. In some respects, it was a stepping stone for you to move on. So thanks for sharing that story. So you're in the middle of this Amazon thing, yet it sounds like to me that you and Ryan started to really be in each other's team. I mean, you had kind of a team mentality and it was partnering that. Where did the idea come into, all right, instead of doing these sheriff sales, foreclosure sales, when did you start thinking, well, let's go after a bigger property? What gave you that idea?
Yeah, I mean, so still obviously reading books, learning constantly. I mean, I still do, obviously. I mean, everybody should constantly read, constantly fill your head with knowledge. And so learning more about kind of the syndication model, just reading books and buying books, how to buy apartments. So doing that, obviously. And then, so Ryan's good friend from college was very successful, and still is. He owns a large shop, billions of dollars in value, in real estate value. So we went down to see him, see his shop, to understand kind of the whole way that they built it, and what they did from the start. And so yeah, we just learned it from him, and kind of put the wheels in motion to start everything. And so we just
So you're going a little bit fast there, Preston. You're going a little bit fast. You go down to learn this. That wasn't something that took an afternoon. I mean, let's talk a little bit about this process. It's almost as though this person became a mentor of sorts, which is important, right? Yeah. In most everybody's journey, there's got to be a mentor. So this person became a mentor, and you said we went down there. You and Ryan went to his location, and tell me a little bit, flesh that out a little bit. Was it, a few days then, and then you constantly were asking him, and maybe even still check in with him occasionally? Tell us a little bit more about that relationship.
Yeah. So, I mean, we still keep in touch with him regularly. He's an advisor kind of for our business. But yeah, we went down there for a few days. We really kind of spent time in each facet of the business. So, there's an asset management department. We went and sat down with some of his asset managers. They pulled up, on the screens, like kind of what they look at, and why is they go over the questions they ask kind of every day. Why is the vacancy this way? Why is the income this way? Why are we losing revenue on this month, or whatever it is, whatever they're looking at, to kind of point and pick it apart. And so we kind of understood that side of it. We met their acquisitions team. We understood kind of what they look at, why they look at it, how they look at it, whatever, and what makes a deal a good deal. All the different things there. And then property management, they had their own vertically integrated property management team, which we could talk about that too, because that's I think an important topic. But what else? The finance, we learned about the financing. We learned about kind of the systems, operational implementation, kind of what softwares, all that sort of thing. We learned about raising capital, which is a big part of the business, how to go out and attract investors, how to make it as institutionally appealing as possible, and while still obviously maintaining kind of a small time feel, or being accessible obviously to any investors.
Hey, Preston, quick question for you. Now, when you're talking institutional money, did you guys go after that right away? Or
No.
have you always been about the smaller type investors that are accredited?
Yeah, so we're mostly accredited investors, high net worth investors. That's really what makes up the bulk of our investment base. And it continues to be that way. I can foresee us, going further into the institutional route in the future. But it's also fun. We get the opportunity to offer kind of these outsized return opportunities to everyday investors that just don't have that opportunity to invest on the stock market or whatever. So yeah, and it doesn't get feed to death by a bunch of funds of funds, and that's essentially what the institutional money is doing. It's going after the same people we have invest in our deals, and then they're getting feed on top of feed on top of feed, and then they go into shops like ours, and then just write one check essentially. So I mean, it's obviously there's a couple ways to look at it, but we do like the that aspect of raising money that way. So
certainly. So you spent all this time, you were learning, you got an incredible mentorship from one of Ryan's friends. Did this take place over like a week? Was it pretty spontaneous, like your trip over to Beijing?
oh, well, the trip to China, that was before this, and that I think it was kind of going on all at the same time, actually. But yeah, so we filled our heads with knowledge and kind of learned from Rob very closely. And after a few days down in Florida, we just started putting the wheels in motion. You gotta it's just like starting any other business. You need a name, you need EIN, you need a operating agreement, and just kind of the basics. All that's pretty simple. Logo, and so you just need the basic stuff, and then it's all that's easy, right? Getting the logo or whatever is super easy. And I think that's another thing that people get hung up on is like, they just start this business and then they, overthink a lot of things. But, as far as just getting into business and just making a successful business, I mean, 99.9% of it is just acting and doing stuff.
Say that again. So some of the sound, and they'll edit this out. Some of the sound goes in and out, Preston, when you're talking back and forth because your microphone. So kind of stay forward to us and speak up a little bit because the sound is going out. So say that again, though. We'll send it, and I'll say that. So we'll start now. I heard something really important there, Preston. Say that again. You said 99% of success is what?
Taking action. Yeah.
We always say
Go
it
ahead, Scott.
very, very similarly. I love that. We always say that you can always correct action. You can never correct inaction. And so that's fantastic. What were you saying though, Jason?
No, I was going to ask you, walk us through one of your favorite deals that you've done so far. Kind of the discovery process, how the part you played in. I mean, you're a partnership here. And it seems like Ryan is a little bit more of the front facing and you do some more of on the back end. Tell us a little bit what your role there is and in a project, and say, all right, we went out there, we found investors, and now we've made them 50% on their money, or we made them 10%. Tell us a little bit about one of your favorite deals.
I mean, I guess really the best one so far was the first one, right? I mean, because you just like the first time you do it, it's kind of like, man, wow, what did we just do? I mean, I guess that's probably, even though it's one of the smaller ones, obviously, that we've done, and but just kind of going back through that and just feeling that, like, once that thing closed, the first one, it was like, wow. This is like, all right, so we just raised $1.5 million to buy this thing. We secured the loan funded, everything's good. We it was an agency debt. It was the first like true agency loan that we'd ever really done. And so I mean, and then like everything is I mean, so when you're like the day of closing and ready to lock the rate, there's certain agencies that do things differently, and certain lender shops do things differently. But I do remember getting a call from like the trading floor. I guess it was somewhere in New York, and you could hear everything in the background, and they said, all right, they kind of read everything out, and they said, all right, we're ready to lock the rate. And we have permission to lock the rate? And I said, yes. And they locked it and said, all right, so you got this rate. And I'll just always remember that. It's just like wow, that was it, and then thing closed, they funded it, and just a special feeling, and from there on out, we're like, all right, we got this. We're just going to keep doing this and keep scaling, um, and yeah, hope that kind of answered your question. But I never really thought about that.
That's awesome. All right. So for some of our listeners, to give a little bit more background, like you guys are closing up your fund, your $100 million fund, and you only have like 3 million left that you needed to raise, which is impressive in its own right. And I know you're opening up another 100 million fund, but what is your goal? Like 5 years from now, what should we expect from Preston?
Yeah. So every year we do kind of a goal setting, retreat, if you will. We kind of pull our whole company together, and we just kind of go through and really just kind of block everything out, turn phones off, sit in a room and play soft music, soft sounding music, just write down everything we can, and then kind of compare notes. And so we did that this year, and I think our 5-year goal for Servio is to grow into hit the billion mark, I would say. But obviously with just core solid deals, I mean, we don't want we just need to focus on the fundamentals and just make sure that we're buying good, strong cash flowing assets, or assets that have the ability to return good numbers. So yeah, does that answer your question?
It does, but you just brushed over that like it wasn't a big deal. Let's rehash that. They're planning on being at $1 billion. Like, that's a big number for 99% of America. So
yeah, I mean,
and it's a number we want to hold you to. It's a number that,
Yeah.
as we progress, maybe in another year, 2 years, or 3 years, we're going to have you back
yeah,
on the
well,
podcast. You're going to be able to say, look, this is what I said back then, and guess what? We've done it, or we're halfway there, or whatever it is. We'd like to hold you to that. I mean, how do you feel about us helping you being held accountable to your goal?
I love that. I'd be honored to come back on, and once we meet it.
how about January 20th, 2028? We'll have you back on.
All right.
You got that long.
Seems like a long time, but then again, time flies, right?
That's
So,
true.
um,
So any final words or pieces of if I could speak today, any pieces of advice that you would give in parting?
Yeah, I mean, so just kind of going back to setting goals, right? And setting kind of the trajectory of what you'd like to see with, any business. I'm a firm believer in setting up systems, setting up people. People are obviously the most important part of any organization. And if you're going to grow and scale and do big things, you've got to have the right people behind you. So, for us, it's in order to achieve growth and continuing to grow, I mean, it's all about the people. So, I mean, for your listeners, I would say that always be thinking about that. I try to make kind of keep a notebook with A players, as I like to call them, and always, if we're not hiring for a specific role, always be meeting people and learning about how one person could eventually possibly come on board, and you're viewing this person as amazing. Maybe they want 150, 200,000 a year. Can't really justify that at the time, but you just write it down, stay in communication, and just eventually hire them. So
I love it.
that helps.
Well, thank you, Preston, so much for coming on. We are extremely grateful. If any of our listeners wanted to connect with you, how would they go about doing so?
Yeah, my email is preston@serviocapital.com, or you could go to our website, serviocapital.com, and just see. You can book a call with any of us. And, if you're interested in investing or just chatting about, real estate in general, would love to talk. I guess we really didn't talk about the infinite banking concept, but I did sign up with you, Jason. What was it, last year, I think? Got my first policy, and it's going very well. So I appreciate you.
So tell me how you've used it.
So far, just invested in our deals. And
So you've taken loans against your policies, put them in your own fund, if you will.
Yep.
And have had really good returns on that. So you've been your own banker on your own investments for your own company. I mean, that's pretty cool. Talk about keeping everything in the family.
Yeah, it is. I mean,
That's good.
Fantastic way to obviously supercharge wealth building. So I appreciate you showing me the opportunity.
Yes,
Certainly.
I like that. Thank you so much for bringing that up.
Jason, any final words?
No, I really grateful. Like you said, Preston, you should come on the show. And I have it written down in my notes, January 2028, $1 billion under management with you guys. I suspect it'll be before then.
From everything we've seen, you'll kill that.
Maybe so.
Well, wonderful. Well, to all of you listening, remember, if you'd like to connect with the guest, we will put all of the links in the show notes down below. If you'd like to connect with Jason or I, remember to hit us up on Facebook, Instagram, Twitter, or shoot us an email. Again, all the links will be in the show notes down below. Also, if you enjoyed this show, make sure to hit that subscribe button and leave us a 5-star review. It really helps. And remember, mastering your millions all starts with your mind and your team. Make sure they are the best.
Thanks for listening to Master Your Millions with Jason and Scott Henderson. Check the show notes for any links or contact information about today's guest. Make sure to follow the show so you don't miss any future episodes.